Hey everybody, 5 years ago today, something happened in the bond market that had never occurred in the entire 230-year history of the United States. See, Treasury yields hit an all-time record low of 0.51%. And if you bought bonds that day, Treasury bonds, thinking that you're making a safe investment, you just experienced the worst 5-year return period of Treasury bonds since the Founding Fathers restructured the debt in 1790s. Today I'm going to explain why that matters to you as an investor and trader, and why this seemingly boring Treasury bond story actually is one of the most important financial lessons that we may experience. So let me paint you a picture. It's August 4th, 2020. The world is in chaos. COVID, we're in the aftermath, right? We've been shutting down the economies globally. Stock markets are volatile. People are scared. We had already turned the bottom, but investors had lots of fear. All right. There was lots of chaos still. And we do what we always do in crises. We pump money into the safest investments, Treasury bonds, right? US Treasury bonds. The demand was so intense that the yield on the 10-year Treasury bond dropped to 0.51%, just a smidge over a 0.5%. Meaning, if you lent the US government $1,000 for 10 years, you'd get like $5.10 per year in interest on that money. Now, where this gets kind of interesting, the Federal Reserve, trying to save the economy, was buying $80 billion worth of Treasury bonds every single month. Think about that number, $80 billion every month. It adds up pretty quick. They were essentially creating money out of thin air, using it to buy bonds, which pushed prices up. And I mean, this is where the inflation thing came from, right? This is the whole spiral of inflation that we experience. Now, here's the thing about bonds that a lot of people just don't quite grasp. They have what's called an inverse relationship with interest rates. When rates go up, bond prices go down. When rates go down, bond prices go up. You know, it's kind of like a seesaw. And we've talked about that. It's reverse to all the auction mechanisms that you're used to. When there's more bidders, prices go up in a normal auction. But in these treasury bond auctions, when there's less bidders, prices go up. That's kind of, and when there's more people participating, prices go down. That's kind of counterintuitive. Now, imagine you're sitting on one end of that seesaw at the very bottom. That's where the bond buyers were August 2020. There was literally nowhere to go but up. And when something can only go in one direction, well, smart money tends to take action, right? The problem with buying bonds at record low yields isn't just that you're getting almost no income and no return for your money sitting there and being tied up. It's that you're setting yourself up for massive losses when the rates inevitably rise and you can't get out of these. You've got your money locked up. It's tied up and it's going to underperform, especially when there's giant inflation, which is what came. Now, the math that'll make your head spin: for every 1% that interest rates rise, a 10-year bond loses approximately 5% of its value. And this is where banks have kind of gotten jammed up. Since August 2020, rates have risen from 0.51% to around 4.5% today. That's about 400 basis points, as they call it, or about 4% rise in interest, which means those bonds have lost roughly 20% of their marketable value. That's where banks got jammed up in this whole situation, with the fastest rate rises in history. Now, it gets worse though, because when you factor in the measly interest rate payments you receive over those 5 years, the total return has been catastrophically negative, especially when you account for inflation, that interest rate risk, and all these kind of things. I mean, we're talking about the worst 5-year return period for Treasury bonds in over 2 centuries of American history. Now, you might be thinking, okay, but I don't own Treasury bonds. I don't have Treasury bond exposure. Why should I even care? Well, this is why it affects everybody. First, you have a 401k. If you have one, or any type of retirement account, there's a good chance that maybe you might own a bond fund in there somewhere, part of that 60-40 traditional portfolio, and those got absolutely crushed during this period because both stocks and bonds have been, a little bit choppy, right? The bonds were supposed to be the safest part of your portfolio, but they became a source of losses instead. So this created a massive distortion throughout the entire economy. When these safe investments pay almost nothing or they get negative returns due to the real market forces, people are forced to take bigger risks to recover those. This pushed money into stocks, real estate, and other assets, and we've seen this inflation bubble created in these assets. As we're looking at the market, it's up near dangerous all-time high levels that I've talked about. It's been forcing everybody to play a game of musical chairs when there aren't enough chairs, and eventually the music stops, right? It's kind of devastated savers and retirees. Imagine you're 65 years old, you're retired, you put in $500,000, and in a normal world, you could put that into safe bonds, earn like 4 or 5% a year. That's like $20,000 to $25,000 in income. But in 2020, that same $500,000, that $500,000, would earn you just $2,500 per year. You'd be forced to either live on virtually nothing or take risks that, well, you probably shouldn't be taking at that late year of your life since you're probably past your prime working years. Now, the real lesson here isn't just about bonds. It's about understanding when markets reach extremes, when something hits an all-time record, S&P 500, NASDAQ, whether it's the lowest yields in history or the highest stock prices ever, that's usually a signal to be extra careful, permacautious, right? Not extra greedy. This is time to be careful. The Federal Reserve created an artificial environment where the safest investments in the world paid almost nothing, and they encouraged banks to load up into them. They did this to stimulate the economy, but they also created a massive trap for anybody that kind of went all in and thought they were making a conservative investment. It's like the Fed built a beautiful swimming pool, but forgot to mention it's only 6 inches deep and told everybody to take a big swan dive, right? I mean, this is why diversification isn't just about owning different types of investments. It's about understanding the risks you're taking, not putting all your eggs in one basket, even if that basket is labeled the safest investment out there. So next time you hear this mainstream media narrative parroted that government bonds are always a safe bet, remember August 4th, 2020, remember that safety is all relative in these markets and that even the safest investments out there can become dangerous when they reach extreme valuations. The bond market just taught us a $20 trillion lesson over the last couple of years about the difference between being safe and feeling safe in your investment. And investors, traders, us, our job isn't to predict the future. Well, maybe sometimes I get it right, but it's to understand the risks we're taking and make sure that we're being compensated for those risks that you're putting your money in. Use it as a tool. And when the compensation is a measly 0.5%, lending it for 10 years or tying it up, maybe that's not as safe as it seems. Now, the Treasury yield disaster of 2020 through 2025, this 5-year return period, will go down in history as one of the greatest wealth transfers from savers to borrowers we've ever recorded. Now, don't let that next extreme market condition catch you off guard because we're kind of sitting at all-time highs. All right? Be careful. Be careful. Be careful. And thanks for being here, everybody. Hopefully that was a cool, summary of how the bonds, the Treasury situation in the last 5 years. It's actually the third worst in history, followed by, we're following up the 1790s when the U.S. first kind of got started, coming out of World War I, and then number 3 is gone. The 1980s. That's what it was. Coming out of the oil embargo stuff of the 70s, that high inflation. Now, the problem here, the risk right now, is that in the 80s, we were at 16%. Volcker pushed it all up, and we had room for outperformance in that next chunk of years. But right now we're only at 4.5%. Even if we started cutting rates back, that's not much room to provide giant real returns in those bond investments. So be careful. That's like I said, that I gave you that ratio, that 1% returns 5% real losses, 1% rise in those treasury bonds provides that 5% of losses. That's kind of the same way when rates cut, we get a 5% boost in bond returns. Be careful. Be careful. All right. Looking at the calendar this week, benign. Like there's just not much happening this week at all. We get the normal unemployment rates and stuff like that. And just be careful. Just not much out here this week. Now we do have some earnings happening as always. As always. And let me jump over to Discord and grab the link to pop that out, please. Yes, visit the site. Yes, I want to load it. Yes. So we've got Palantir came out last night. Hims and Hers came out last night. Mercalibro, Axon, Navitas, Vertex. We've got other fun stuff like Marriott. I've got a short on that one. Check that one out. This morning, DuPont, Lemonade, Duke Energy, BP, Caterpillar, Pfizer. This afternoon, coming up, AMD, Supermicro, Arista, A-Lab, Open Door, Snap, Lucid. A lot of big names in here, even though they're not big tech, like top of the food chain, Mag 7 type stuff. We've got stuff like Uber, AppLovin, Shopify, Shopify tomorrow, Uber tomorrow. I mean Wednesday, excuse me. Yeah, it's tomorrow. Yeah, that's tomorrow. This is today. Six Flags, Walt Disney, Dave. Hi, Dave. McDonald's. I've got some of that. And then Joby. A lot of traders loving on this Joby. Not sure why. Kind of a dangerous stock. Personal favorite, Celsius. I love even the late night shows were jumping on this alcoholic Celsius accidental labeling stuff. I think it was actually the vodka seltzer company, when they looked at the cans in their boxes, they were finding Celsius cans in there. I don't think it actually went out to the Celsius distributors with vodka seltzer in it. I think it was a case of the label machine still stayed on Celsius, even though they switched the production over to the vodka seltzer. But I don't know. Anyway, if you haven't picked up on that, it's kind of a funny story, and should be an interesting rest of the week. We could look at some of these here in a minute, and I guess pop over here. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. Just because I predict things doesn't mean they'll come true. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling anything, including stocks, options, bonds, forex, futures, cryptos, treasuries. And if you desire personal financial advice, hire a consultant financial advisor. I got a comment on the DJT video last night. It's like, oh, this thing went in the crapper. You're so wrong. It's like, okay, one, I said 3 to 6 months. Two, that's not really in the crapper when you look at the big picture. I mean, yeah, it went from 20 to 16. Okay, it went down $4. It didn't move. Big picture, it didn't really move. I mean, if you're betting on it going up tomorrow, you bought short-term this week only options, well, bad move. I do have 1,200 shares, and selling upside calls. We're in this squeeze thing. Higher lows, lower highs. We might need a dip right back down, take out this low at 15. It's quite possible. Might have to do that before we can do that. We'll see what happens. 50 is still possible. It's in the chart. I mean, but if the S&P is grinding down, we're probably not going to do that. So if anybody took that ES trade yesterday, came out a winner chicken dinner. Wasn't big money, but very low risk. Let's do it again, shall we? Let's check it out. Let's look for another potential today. Jump over here. Down is down. Let's roll down here. Look at where we could possibly be. You pick up somewhere around 30 cents for your money, being at 21.15. Let's check out how risky that might be. I'd take a lower low. Be right down here. That'd be a pretty safe. 99.5% chance you're not gonna go in the money if you're down here at 62.15. Now, let's say you wanted to be a little safer, right? What could we do? Jump out here to tomorrow, and roll down. You can jump in here at 60.50, maybe even 60.40. That's below support. You can grab that one if you want to tie your money up till tomorrow at the close. Make a few bucks. It's not a bad place to park money for. That's a pretty fair return. Take a drop all the way down. 60.50 would be all the way down here. You'd be like, well, I could day trade and make more money than that. Well, that's not the point. This is a place to park money and not have to sweat it, not have to worry about it. Get some return. Look at that. We'd have to do an outsized move down to put you at risk. Now, if you think we're going to turn down off that 618, just wait for the drop and then sell that down there. You get even further down. Right there. I've been doing a few of these lately. Not bad. Anyway. Morning, everybody. Channel members Don, Sergio, Rob, Frank, Donald, Will, K, Scott, Diane, Craig, Marianne, Nancy, David, B, Darren, Ted, Cliff, Mary, Dan, Pauline, David, Svenborn, Ted, John. Good morning, everybody. Remember, 30 minutes of awesome coming up at 5 o'clock today, right here on YouTube. Just show up. You can make your requests. Channel members, unlimited requests, and they get priority, but non-channel members, I think it's fair. 3 requests is kind of what I'm rolling with right now. So pick your top 3, show up, or you can be a channel member and you get unlimited. So that's one of the benefits of being a channel member. Anyway, thanks for coming. And then I'm also on Profit Panel today at 11 with Jack Carter. What do y'all think about me and Jack starting our own show? Anybody have an opinion on that? Jack's a former market maker, in case anybody doesn't know who Jack Carter is. Former market maker, works with a publisher. Him and I have been talking about starting our own show, maybe Wednesdays and Fridays, and trying to provide awesome content. Now, he loves to sell credit. He's a credit trader. It's kind of his bag, baby. He loves to do kind of what I'm doing here to the extreme. And so I feel like it could be a pretty good partnership. He's got a lot of market maker knowledge that I don't have. And he kind of thinks that I've got some self-taught knowledge that he doesn't understand or know about the market. So it's interesting. He said he was fascinated with me in the meeting we had yesterday, that I have this ability to figure things out in the market without any connections or any Wall Street knowledge. So 50K challenge going okay. Past month, 15. It's a long way from 50. And the way things are looking right now, we're going to drop this back down pretty good because I'm in some share positions and they're just kind of doing this. Not really doing this and not really doing that. I mean, they're just kind of, so grinding me out. I did get put, this, even though it shows a profit, I did get put those shares. That's where the 1200 came from. This one right here, I got put one of those shares or one of those options. So I got 100 shares of this. This I've been selling calls against. I got 300 there. Chewy, we got some Chewy. Got some CMG. 400 shares there. So just a smattering. Just a smattering. Now, Akamai. This wasn't really on my bullish list, but this looks like it might be coming into a potential bottom here. Right down in here. Now, I sold the 65 for this Friday. Earnings are coming up on Thursday after the close. So, I'm either going to get put to the shares or I'm either going to make full profit on that baby. I've got about 50 cents. And with this pushing down today, we may be able to get a little better return here today. For me, it's not about picking the exact perfect entry. Let's see what we got. Roll down. 65s. Yeah, 45 cents. I got about 50 cents yesterday, I think it was. Or maybe I got 40 cents yesterday. I don't know. I was trying to get 50. So right there, if you wanted to play along, if you want to go more conservatively, that premium kind of drops off at that point. So yeah, be careful. As always, right? Always permacautious. Let's check out some of the other stuff with earnings, shall we? PLTR. 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 Oh, nice pop. HIMS. Ooh. Made a little higher high, but coming back down to the roadmap line. Let's see, MELI. Yeah, coming back down. AX1, Axon. Nice pop, going on up for 915. MVTS. And coming back down for the roadmap line. And that's a low price one too. VRTX. Well, turned out that was the first move down, retrace, and next move down. Right, look at that beautifulness. Like ABC for an absolutely ABC, beautiful. 1, 2, 3, 4, 5. Probably going even deeper. Correction. Absolutely beautiful correction. Probably got more to go. How far? Click on the right thing. Looks like we could drop it on down in this 360 to 390 area, which we're freaking close to, but so far that's only 1, 2, 3, probably get a little 4 and a 5. Of course, it could just drop in here and reverse higher again. That's VRTX for you. Bell ring. Ouch. And let's look at Pfizer this morning. Oh, nice. Nice little bounce going here. This was on my potentially bullish list. Came down. Didn't quite go as deep as I wanted it to. Doing the bullish thing. We did although we did that absolutely beautiful correction. Maybe I should have sold that one. Dang. That'd been a nice one right there. Pfizer, Caterpillar. Yeah, reaching on up. Yeah, look, that didn't participate in this correction at all this past week. Going up for 445, 471. BP. Not really even moving. Duke Look, Duke. Yeah, at the target. Beautiful. Lemonade. Going on up for the target. 60 on the upside. DD. DuPont. Just stuck at the roadmap line. ESPR. Spirion. And nothing. Eaton. This was coming back down pretty good. Missed the target. Probably coming back for the roadmap line. Retest. And then we'll see if we can go for the final move. And Marriott. This dip below the roadmap line. Back testing. We hold below. I do have a short on this. I'd love to see it accelerate here. We have a potential, little baby potential 1-2 in place. Need some more participation. Although it did hit a, so we may be working on the 1-2. That was perfect for a 3. May work on the 4, may work on a 5, then do a 3-wave retrace, and have a bigger 1, 2, 3. Yeah. That's where I think we're going. Just may take a little while to get there. And after the close today, AMD. I don't like where we're sitting right here. This is, I mean, you can take a gamble on it. If we pop, we're going to pop pretty big, probably. This could pop right on out to 266. But the risk is that's one big swift move up. This looks more like a W, X, and a Y. Would put it right back down here. I'd be careful. Now, first move up, retrace, hold in here, sets up the bigger upside bullish reversal. Which way does it go? Not sure. That's kind of, I want it to provide me clarity. Right now, this is not clarity on that move. It's just one big rip. Makes me cautious on AMD. SMCI, still bearish. That's lower highs. Potential for downside. I feel like it's pretty high. Although, if we complete this big 1, 2, 3, could pop us right in here. And then take that trip down there. Not my favorite. I don't like the uncertainty there. ANET, hey, that one lifting off here. If we could fill that gap, 150 on the upside. Don't think I'd bet against that strength right there on ANET. Lab. So we might lift on out to 170s. Open door. Let's be serious for a second. That's a horrible chart. All right. This is not like, hey, all of a sudden we're going to, like, meme stock mania, we can go higher, but this is $2. First warning sign. We don't always follow. Like, even money, you know, you'd be like, well, $2, that's not much. I can put $2 on it. Yeah, if $2 is all you put, if you put a full size regular position on it and you're betting like $2,000 or, you know, whatever on it, you know what it could do is go back to the lows, and all of a sudden your $2 is now worth 30 cents. So this is not showing the ability to get going to the upside. Be very, very, very careful chasing this one. Could just be a bubble and we take it right back down. Of course, it could do some crazy shiz and go up to 70, but it's not very likely. Not very likely. Snap. Well, that looks like we're going on back down again. That's 3 waves up right there. A absolutely beautiful correction. Stopped right in the zone for continuation lower. There's some people that use Snap, but I don't know any of them. Lucid, probably going down. Upstart. That one could actually pop up to 115. We're on a no gaps. Bigger resistance right up here. That looks like where we might head on Upstart. Nice. And then Rivian. That's just a sideways chop. I don't think I get involved in that. Probably just going more of that. And then CLOV. Yeah. Low price stuff, probably going down in a blaze of glory. 3-wave up into the roadmap line, continuation lower. Now, could it break out? Sure. Anything can do anything. Like, there's no have to do anything in the market. You know, you can always be wrong. So, that's kind of the outlook of earnings through tonight. I guess I should go ahead and hit the things for tomorrow so that if you want to play, you can play. Uber might come back to the roadmap line, but might push on up to 104. Not very confident either way. Shopify. I really like Shopify. I think we're going on up to 140, 150. That doesn't negate getting a swift retrace here. And we could even get a swifter retrace. Bigger retrace going. See what we got. See what we got. Now, obviously, we didn't retrace from back there. We pushed on higher, but we came up to the prior high. Pull that up. So now we have this support zone right in here, just below the roadmap line. And it would look really nice if we did that. I'd probably get involved here for the bigger upside potential. Shopify has a lot of things going on, a lot of irons in the fire to get this thing getting extra spicy, extra crispy spicy. Could be shooting for 300 up here. So a nice pullback in the 90s would get me interested. And OSCR. Chop, chop, chop. Yep. Got the axis on there. NVO. Well, guess what? I went below the target. I'll be hornswoggled. Coming into the 44 support. We tag this. Morning, baby. What was it? Went in on profit panel last week. I talked about this going down. So if we come on, if we drop on down in here, that might actually pop right there. Disney. I'd watch out for a retrace, but we have potential going up. We didn't quite hit the 125 or 132 area. Fun. Man, I haven't been to Six Flags in a long time. I love roller coasters. So that's potentially 5 up. This is a sloppy 3 down. Welcome to corrections. Potentially bottoming in the right spots, but might have a little bit lower to go. Push down into that zone. Yeah, I wouldn't bet on the reversal here. Churn. That's probably going lower low. And Dave. Hello, Dave. Oh, that looks pretty bullish. Got some resistance at the prior all-time high. Reverse split hiding in here. Puts it on my don't frickin' trade it list, but there you go. Saw an interesting tweet about this stock being a recessionary indicator. Gotta know what they do. I'll leave that up to you to Google what they do. So look at what happens every time we do a financial crisis or a downturn in the economy. So we kind of peak excitement. Tongue in cheek for what this company does. Peak excitement. Peak excitement. Could be that we see something more sinister happening here. If we get below the roadmap line, this is a big cautionary. We could see a bigger potential correction here. I mean, this is potentially done for now. We need a bigger correction of that whole move up. Adult entertainment. That's what they do. So keep an eye on that one if you want to. Probably going to take a spill. Could come back into this $5 area. All right. Let's go find stuff that makes us, what's happening, what's crapping today here. And it's already almost 10 o'clock. Crazy. Been blabbing for 45 minutes and haven't even got to the good stuff yet. Snake and sparklers. All right. Look at this right here. S&P 500. Yesterday, massive rip. Came up into the 1 hour roadmap line right after the market closed and parked it there overnight, tapping on the 618. And here we are. So we break through 63.80. Probably going on higher. Probably going back to new highs. It'd be a beautiful 4 hour roadmap bounce. Confirm. 65, 66. Probably targets on the upside. So if we break through, first stop, next stop, final destination potential. Not bad. NASDAQ kind of same deal. Not quite, let's see. Not quite touching the 618 though. That may be this one's lagging slightly. So that may be the one to keep an eye on right there. Get the SPX. Jump it down. Cash index, tagged it. Tagged it this morning. So be careful. We turn down. How do you know? Like here's the line in the sand, 6,300. Get below that. Probably coming down for the next move. Next move takes us down to 61.10. As we talked about. Probably won't be super fast, but could. Only took us 2 days to do 200 points. So be careful out there. Dun, 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 dun. Yes. It's not about sales pitches, David. It's about knowledge. I don't care what he sells or what he's whatever hawking. It's about his market maker knowledge. Anyway. Resistance. 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 Across all three indexes right there. I got that alert this morning that we're coming up into that 618 right there on Russell. All three have a same potential downside setup, so I'd be a little cautious there. Oil coming on down to the test. If we could push through, it's baby going on down. Remember, everything I said about oil hitting 50 from back earlier this year still holds true. Got to 55 and what happened? Hot war, baby. If we get down here, what happens? Hot war, baby. Gold still grinding. Holding slightly. And we're still lower high here. Even though we're spiked up here. Still cautious on that. That doesn't look like 5 down. That just looks like 3 down in a retrace. It's possible that we go on higher. Possible this move up and quite done yet. We could retest this high from 22nd or even this high from back here in June. Bitcoin. Churn and churn and churn and burn and burn and burn. So as we talked about yesterday, here's the low, here's the high. We want to see that 618 hold, which is exactly what it's done so far. This sets up the bigger potential pop. Pop, pop, pop. Once you pop, you can't stop. So we got down, we're basically back to the zone where I said we needed to retest 2. We hold it. Let's go higher. We need some bullish momentum out of here, though. Now, what I don't like is that structure. Not the cleanest, bestest structure. But if we get above about 15.5, probably cruising on up here, hopefully up here, back to 120. And take this on up to 125 to 130 and wrap that up. Let's see, SYM. Boom, goes the dynamite. That went to a bullish. Look at that. That's on a potentially bullish crank there for SYM. Industrial machinery. Ethereum. Turn it down a little bit. We got that overlap, so now we're into sloppy Susans. I don't know which way we're gonna go. Not very clear. Could continue down. Could break out. Not unclear at this moment. NKD going for the. That was potential done. We get back above 41.3. See if we can break through the year ago high from July 2024. Dollar. Churn and churn and churn and churn and churn. Well, that's interesting. Look, I thought dollar had to drop for gold to go up. Gold going up, dollar going up. Correlated when they're correlated, not when they're not. All this big narrative about gold. Gold goes up when the dollar drops. Dollar's up. Gold up. If the dollar makes another big leg, though, gold might take a step back. Just caution. Apple. Still in my Apple shorts. If you stuck with it, you can still get out. I'm still looking for multi 100% gains. 50% gains was not on my bingo card. It's not what a hedge does. A hedge pays you out. Hedge doesn't return 50%. Hedge returns like, we had a potential 1,400 or whatever it was, 1,300% gain, 1,400% gain, 14x your money. Yeah, it's 1,300% gain. So that's the kind of potential sitting out there. But If it don't work, it don't work. Amazon coming back down to the roadmap line. If we break below it, probably coming down here. Google just grinding in here. Gap down. Many times we see a negative reaction off gaps. Meta probably reaching for the stars. 793. Microsoft came up just a little shy of that, so we're probably going to go on back up here, that 565 area. Nvidia, be careful. One little thing can cause this to come back to the roadmap line right there. Retest this breakout support area. Tesla rolled out a bigger robotaxi area in Austin, rolled out a big area in San Francisco Bay, but they still have safety people in the front. So is it really full self-driving? Is it just fantasy? Looks like we're squeezing this baby out. Then do we pop or do we drop? This thing has massive premium, so I keep selling like 350s against this. My cost basis is like 310, I think. So if this thing pops for any crazy reason, make like $4 grand on 100 shares. And if we dip down in here, that's where I looked at. Sell more. Sell more. Netflix probably still grinding on down to the roadmap line right there. All right. Axiom, we already kind of talked about that. Heading on up, 915. These are things we're popping or dropping. MDGL, grinding it out. BWTX. Yeah, nice pop. Zebra. Ooh, coming back down the roadmap line. This is constructive for going higher again. Let's see. Higher low. That went really deep, so not a fan of the deep depth of that pullback right there. If we can maintain this, we might get to this 450 to 560 area. And if we push on through that, this tips this more bullish for a continuation. That's a long way up from 317, so you could play for that. We're probably going to come up here, tag that, at least get close to it. That zone will be my target right now, conservatively. If I was getting involved in zebras. Hitting targets, watch for the pullback, CMI. Reach for the stars. Here's the high, here's the low. Looking for 409. ZTS. Watch for that to go lower. That's retesting. PLTR. 186. As I said, when they go crazy, they can keep going crazier until the music stops. LDOS. And we're coming up into resistance. If we can get through it, 217. STAA is bearish and probably still bearish and is biotech med stuff, so I'm not going to get involved. That's leverage. ACLS. Yeah, I mean, that might be the bottom here. And the upside on this baby could be pretty big. Yeah, I got it drawn up there. Pretty big. Big indeed. 7 to 900 from, I mean, that's a 10Xer, baby. Be a pretty nice one. Might take a little while. Could be several years. AVAV. Yeah, we keep going up on that one also. AIP. That rings a bell. Like AIP, Alumni Insurance Program. AIP. Anyway, has nothing to do with the stock. Semiconductors, just that's a grind with overlap. Talk about this quite a bit lately. Yeah, it's in a channel, but look for the swing, back to the low, make a low and a high in between, and overlap. Overlap, overlap. Goes to move up. Doesn't provide much clarity. Now, it could be a nested setup, but just not great. Race, I like clarity. I like easy charts because there's plenty of them out there. You just got to find them. Race did a big retrace and potential. Well, we got a big resistance we built into that. That gap down is a big resistance at this point with the 618 almost in the middle. So 529 for going up, but that's looking like we found some major resistance in here. Might take this the other way. Watch for supports. Break down below 410. Might be heading for bigger, deeper correction. APO. Apollo Global Management. Yeah, we hit the target, retraced. Just small picture, looking for 160, 163. Grind it on out. SNN. Smith and Nephews. Snats. That's a lot of sideways. Little pop. Nope, not for me. DuPont, we already talked about. Duolingo. That's a potential for downside here coming into earnings on Wednesday. Oracle. 270 on the upside. This was an AI catch-up trade. Still got more upside potential here. 320-400. Xometry. That's a pretty nasty chart right there. Could be a bottom. That's a beautiful retrace. If we can stick the pop, that would be the target. Because it's not bullish until we prove it's bullish. So conservative target, just go for the bearish win. 73. Not a bad upside from 43. WLK. It's probably going down. Lemonade. It's probably going up to 60. Has earning, that was earnings today. This is a weekly payer on PLTR, so this is, look at what this did on the last pullback. Look how devastating that was. Went from, and we haven't got back to there either. While PLTR is at all-time highs, this one is not. It is on an adjusted basis, but not on. I would be very careful here. Waiting for a pullback would be a great place to pick this up, especially if PLTR pulled back to support. But picking it up now, pushing into the high, it's high risk right there. Be careful. And if you're riding it, maybe consider where you're going to step off on that one. CSTO. Went through coin yesterday. Nothing really changed there. Didn't make the list today. I don't believe. Let's see. Coin. Oh, there's coin. Oh, we'll get there in a minute. Sezzle. Probably come back to the roadmap line. Logi. Wow, look at that. So those look like the wrong color candles, right? Like that. Bounce, red. Move up, red. Move up, red. That's a warning sign to me when we're progressing and the candles are the wrong color. But 98, 99. Then maybe a bigger pullback might be in store. TOCN. DigitalOcean. I'm a, lot of my algorithms run on a DigitalOcean server, but that doesn't look very tradable. LSCC, lattice. If this can break out, got 60 on that last kind of. We did another swing in here. 58, 59, 60. Watch for that resistance. Not sure we're going on up to the bigger. The bigger numbers yet. Let's see, pull that all the way down, push this up here. I guess that was the right way. That high, this low. Yeah, there's a pretty major resistance right there. So I'm not sure we can push through that 60 yet. I'm not sure why that one is drawn on there. It's working on it, but I'm not sure. Sprouts Farmers Markets. Back to the roadmap line. Look at that. Look how solid this little pullback right here. Look how solid that 1618's been. Even on that pullback, we couldn't bust through it. Winding up for the pitch. If we can bust through. Here's your upside target right in here. 187, 195. TXN. Potential retrace. This looks like first move down, retrace. Potential for another move down. SMCX leverage. IONX leverage. FTLF. Regular split. Regular splits don't bother me, but this has potential to. So when I put these on here, absolutely beautiful correction potential right there. Now, if we go 1, 2, power 3, we'll probably pop up here. But conservative target right there, 20. It's not big money. I like the big 10 extras or whatever, but ERJ, MBRAR. Got to adjust the fibs. Hit the target there, retraced again. Looks like 64, 66 on the next upside. TMDX. Grind it out. If we drop down below supports, coming on down. If we can pop it through. Continuation up here. And resistance at to leverage. KTOS. Man, look at that exponential. Going exponential. Vertical. You know what that means. Likely some chop, some turbulence, and then fall out of the sky. Fig. Just like fig here. Vertical, fall out of the sky. FUTU. Oh, that's a nice retrace right back down there. Probably going on up 390. All right, decliners, Melly. Coming down for the roadmap line. Oh, baby, that's a beautiful. I don't like the big gap because that creates resistance all the way up there, but that was a beautiful retrace. Right in the roadmap line. If we can hold it, if we don't, probably come back down to lows at 1200. IT. Wow. A, B, C. Wow. That absolutely beautiful correction. This might hit 214. If it doesn't slow down, we could go on down to 150. PRTX, absolutely beautiful correction. ABC, potential low further down. INSP, absolutely beautiful correction. Playing out. Eaton, we already talked about. Coin coming on down in a blaze of glory. There's the target. Here and here and here. We got below, retesting the breakout. Breakout didn't hold. Coming on down. 280, 250, 220. Those are the next levels of support. I'm going to buy here. Are you prepared to hold to here? I'd wait for it to find supports. Do a reversal pattern like boom, chung, chung. 608 retrace. Set it up for a pop higher. If we don't do that, I'm off this baby for now. The T, coming back to the roadmap line. Him Z with 2x leverage. Turning him around. That means Hims right there. Coming back up pretty good. So we can take this on out to 84 to 97. Looked likely to pop back down to the roadmap line, but we don't got to do that. Don't got to do nothing. KMT, lower highs. Be careful. Absolutely beautiful correction can be done. First move up, retrace could be deep. Back to the 618. This is kind of what I was just talking about on Coinbase. First move up, nice fat retrace, hold, and then you're set for bullish glory. Could still fail the breakout though. Berber, already talked about that one. 4 shift payments. So we're coming back down to the bottom of this squeezy channel thing. And not sure why it's not on the price action. Trying to break out, failed to the bottom. If we get below this uptrend of lows, though, this is probably we're coming back down to the 20s more than likely. That'd be a massive whack. I mean, we're talking 75% off the price. Crisp already drew it. Came up shy of that. Sideways chop. ICHR into the abyss. KD heading to the abyss. Circle heading to the abyss. Need like a Kraken come up and grab some price. Cat, already talked about that one potentially to going up. T-Rex. So we've got this downtrend of highs cooking. Keep rejecting. If we can break through that, pick her upside 130. MSTR coming on down for roadmap line hits. So we hit it on the 4-hour. Is the 4-hour good enough? This is the question, like right here. Is this good enough? Was that good enough hit? Or do we need to go on down for the daily? It's not a long way, but it is downside pain here. Pain. 350. AWK. Well, that just looks like we're parked right there. EPC. How low can she go? 0 is the answer. Be careful. Yum. Stuck on the roadmap line. Not moving. More. Looking for a continuation below 250 to accelerate this baby on down. Yeah, Reddit. that's probably going on up. We cleared the resistance. 269. Taking off the emergency conditions. Probably heading on up. I wasn't gonna bet on it. That was very unclear. Ormont Technologies probably looking for another retrace after that big pop right there. Right up to the 1272 resistance. If we can hold the breakout at 84, push on up to 101. If we don't, probably come back to the roadmap line around 80. Koi. GFS. Probably going to make a lower low. Verb. And dumpster fire. Not touching it. All right, stuff I follow that potentially has a bullish setup for roadmap line today. That right there, that pop yesterday. I'm not liking the fact that one candle set the low and the entry. That would be the target right there, 44. And it is an entry, so 8 trades in the past, 62, 1.2. It's not horrible, not my favorite. Here's another one. This high, this low, nice pop. Not much room left for the upside. The pop was a little aggressive. 1670 MSCI. Here's the high, here's the low. There's the entry. 604. Look, that was pretty smoking hot right there. Look at that. 93% win rate. 5. The only problem is only 16 trades in the history. So that means these numbers don't really hold much mustard. In. Real estate investment trusts don't typically work out the best. As you can see, 42, 66, negative. They don't really move in trends with the market, so careful there. And SR. That's a fat pullback right there. It filled at the market. You could fill here. Might fail. 79 is the target. 62. Wow, this one. 62 trades. 75% of the time it works out. Profit factor running a little lower than the average at 1.2. It's not horrible, though. That one might work out. WC almost hitting the target. Look at this. So close. Come on. So close. Come on. Rosie, you took it with me way back here in May. MCD reporting earnings this week. Maybe we get the turnaround earnings. And then PGR also keeps sucking it up here. Did stop out on the system, but I'm still holding. If we get below this low, I'll reevaluate, but I've only got 2 shares, so it's not like a major. I can wait for this to turn around here, but the pattern is void. So we'll see. Took that profit factor negative. Ouch. Ouch. All right. I guess we should talk bias before I talk wrap up here. So thanks for hanging out with me. Those of you still here, all 64 of you. If anything I said was helpful, beneficial, give me a thumbs up. Probably a lot of channel members left. Thank you for hanging out with me. And that's not looking good, everybody. Be careful out there. So primary expectation would be a 618 retrace. that would take us right back down here. Now, we don't typically bottom on Fridays. So if we fulfill that prophecy, lower low, probably right down here around 6,200. That can happen today. That can happen tomorrow. Doesn't have to happen today. So that's support. Now, that's kind of my expectation right now. Pullback, maybe retest the low or the open from yesterday, possibly the 618. Now, bullish stuff. And remember, 5 p.m., that's the request show. Come hang out. Make all the requests you want. If you're a channel member, if you're just a subscriber, you get 3 picks. If you're not a subscriber, you can't chat. So, got to be a subscriber at least to be able to chat on the stream. Potentially bullish stuff. We were talking about Chewy, kind of keeps hunting for support. Probably have a little bit lower to go, down to 34. And the absolute beautiful correction. I'm just going to have to wait for it. DJT also keeps pushing into this low here. 3 up. That was not awesome. 3 up, continuation lower. Support down here. We might have to go visit 15, as I said earlier. DocU is an interesting one. Get up off the mat. No. Get up off the mat. No. Can we get up off the mat? Or do we need to push lower? IBIT. It's looking pretty good yesterday. Today, Bitcoin pulling back again. Hanging with my homies. Let's look at Bitcoin. Yeah. So we're looking for this to hold. That's 618. If we get below 12.5, probably going lower low here. Lower low. And that actually would complete the pattern. So the other thing I was talking about yesterday, move down, retrace, move down, retrace, hold, as long as we held below, right there, still potential to come down here. One more time. But we can't hold that. First move down, the retrace. Pulled off of that high right there. Looking at just below 111. And that might be what she's in for right there. So if you want to be able to sell some IBIT puts, set your alert right there on Bitcoin. When it dips, sell those puts. Right there. What would that look like? Well, IBIT's already down there. So it's a little bit skewed up here. But first move down, retrace. So you've been looking for a dip right here. 63 area. We get in there, sell something down here. Maybe even here. Get some good premium. And then hopefully we got the bottom in place. Nothing's ever guaranteed. It's always a risk, right? There's no reward without a risk. So that would be one I have my eye on today. Because it might happen. That's not far to go. Not far to go. So that's where some opportunity is right there. Set an alert like at 63, maybe 63.50. Depends on how aggressive you want to be. Sell a put spread. And you're like, No, I don't want to own shares. I just want to take a little risk. Well, come down here like 61, then jump down however far you want to. You don't have to just go straight up naked put. Here's the extra value for hanging out with me. Fly out. This is actually the monthly expiration right there. Should have the best premium. Let's see. Let's check out the volatility curve. IV term structure. 2 weeks. Actually, 3 weeks should be 1 month out. 1, 2, 3. 1 month. 1 month out should pay the best, according to, well, without going out 2 months. Fly down here. So when this dips on down, these will be the prices when we get down to 63. At 62, you'd be looking at $2. How do I know? So here's where price is hanging out right now, right at 64. When this drops to 63, these prices all shift. So if you're looking at, what can I get for, when we get to 63, $2 out of the money. So you just go up here right now, you go $2 out of the money, get about $1.45 for that 61. We get down there and you're like, well, all right, sounds pretty good. How much risk? So for every point you go down, extra, it's $100 risk, right? Every point. And this has 50-cent strikes, so you do $50 risk. So if you just wanted to go for minimal risk, do the 61 and then 60-50. We're shifting this all down when we pull down in here. They get you like 15 cents. Not great. 15 cents on a 50-cent risk. Turn on risk. Not the most banging, but it's not horrible. 15 divided by 45 risk. It's 1 to 3. Not great on a credit. I mean, it's better than a lot of them. A lot of them are like 10 to 1. Like get paid 1 and risk 10. So it's not bad right there. You can do a crap ton of them too at a $45 risk. Be out here a month, so just takes a little pop. And if you want to go for $1, say $1.45, $100 risk, get you. You're only jumping up to like 30 cents, only doubling it. Yeah, this is what I'm talking about. So 30 over, you'd be like a 70-cent risk. And the risk rewards gets kind of worse. 30 divided by 0.7. Yeah. 42. .3 to 1. Yeah, be careful out there. Or you can just fly down here and do something, See, I was saying sell the 61, just straight up sell it, or maybe sell the 60. So you'd get paid like $1.50, maybe even $1. But you'd be tied up, your money be tied up for a month, basically. So, all right. There you go. Hope you have a great day. That's a potential opportunity if Bitcoin dips right down in here. Like, looks like it's probably going to. Got my profit panel show coming up in 20 minutes. So come hang out. prosperitypub.com/profit panel if you want to hang out. If you don't, that's cool. Be back here 5 p.m. Eastern as always. Have a great day.